Hello, hello, and welcome to this week's Profit Maximizer Moment. I can talk. It's the show that's dedicated to helping business owners dramatically improve their bottom line with our weekly profit maximizing tips that you can use now. I'm your host and coach, Wayne Belisle. I'm also the founder of a local CPA firm that works with business owners to help them make more money and keep more of it from the IRS. I do this with our profit coaching programs and our tax planning system, which has saved my clients over $7 million over the last 5 years, all legally. I love my clients, but I don't want to share a jail cell with them. And that's what we're going to be talking about today: how to pay less taxes, how smart business owners pay less taxes. All right, we're going to talk about that. But first, support for today's show comes from Profit Maximizing Publishing, which published my book, The 90-Day Profit Reset, in the middle of getting the second one out. So as soon as we get that, we'll be happy to share that one with you too, which shows you how to gain your independence from reduced cash flow, shrinking margins, and an evaporating customer base. In this book, you'll find chapter after chapter and idea after idea about how you can turn around your business, reset your profits from red to black in 90 days or fewer. Even entrepreneurs who are making money will benefit from my book by learning how to make even more money. This one definitely is, especially in today's world, this is definitely a keeper. All right, I'm going to talk about how to pay tax. Look, today is September 15th. All right. First things first, if you haven't filed your corporate tax return, you're too late because today was the extension deadline. It's amazing how many people were doing. Personal tax returns are due October 15th. So if you haven't done your personal tax return for October for 2021, you need to get it to your tax preparer like yesterday. Okay. But what it really is the start of tax planning time. And we're going to talk about that. So, reducing your reducing your tax expense, your income tax expense, is a key component of profit maximizing. That's what we say. Our job is to help you make more and keep more of it after you make it. All right. We do that through the tax planning. Truth of the matter is, very few business owners do anything to reduce their income tax bill. Most business owners assume all they have to do is turn their records over to their tax preparer, and their job is done. Click, it's done. And then they complain they owe the IRS up to half of their profits, and they get mad. The truth is, the smartest business owners focus on finding legal methods of reducing their tax hit. These business owners pay a smaller percentage than the average business owner. What do they do differently? Well, let's go through it. First, the smart business owners prioritize tax planning. Why should every business owner take tax planning seriously? Well, tax planning is one of the few guarantees a business owner has or will ever get. You're guaranteed to pay less in taxes unless you had a loss in your business. And even then, there's a chance I can do something to get some of that money back. All right. Possibly carrying it forward, whatever, some planning. But if you've got a business and you're paying taxes, it's a rare thing indeed if I can't come up with some completely legal ways to save money. All right. And we're doing more people now than we used to because we've changed some procedures, added a new program. We're starting earlier. We're literally starting tax planning next week. Okay. Hold on a second. It doesn't fail. It automatically, somebody tries to get a hold of me when I'm on. So we're literally going to start tax planning next week. All right. Why? Well, let's talk about that. What I hear, and truthfully, what's the amount we save? The lowest I've ever done was 12 to 15,000. The highest was 700 and some odd thousand. Okay, they're usually between 40 and 100,000 in tax savings. Do that every year. How much would you rather give it to the IRS, or would you rather put it in your pocket to fund your education, to fund your retirement, whatever? But what I hear is I'm way too busy for that. I don't worry about tax planning. I hire a good CPA or a good tax preparer. What they fail to understand that there are considerably fewer things we can recommend after the year end is over to cut their tax bill. It's like Cinderella at the ball. Once it hits midnight on December 31st, her dress goes to rags, the horses go back to mice, and the fancy carriage goes back to being a pumpkin. That's how it is with tax planning. Once January 1st hits, I have a whole lot less things I can do. Now it's history. All right. All I can do is report your information correctly in a way that minimizes your taxes as much as possible, but the number of arrows in my quiver is vastly reduced. There are some things I can do, but not a lot. So how much can you save? I just went over that. We're well over $7 million in savings for our clients over the last 5.5 years. It's going to be 8 to 9 million before we're done. All right. That's money that the business owner can use to expand their business, fund their retirement, pay down debt, hire key employees, take that dream vacation, pay off their mortgage, da 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 da. All right. I'm pretty sure every business owner has a much better need for that money than giving it to the federal government, who's going to give it to somebody who doesn't want to work. All right. And every single thing we do is legal. All right. And clearly outlined in the tax law. I like my clients, like I say every week, but not enough to share a jail cell with them. Plus, I want them to be comfortable. When we give them the tax planning package, it has the code and the regulations and everything so they can see it. Why does tax planning work? Well, it works because it gives you the time to do things with your business that you can't do after the year end. It's really just a matter of being proactive rather than reactive, and just dropping your stuff off at your tax preparer sometime in the spring. Listen, what you don't understand is when I'm doing tax returns, like we just finished doing a bunch of corporate tax returns that are what I call my procrastinators, we're in compliance mode. All we're trying to do is put together a return as accurately and legally as possible in a way that reduces your chances of being audited. All right. We're not really looking at tax planning. That's a totally different hat. All right. So we'll take our hat, we'll put it on after the 15th. We've already started on some. So I'm going to be meeting with people, if not next week, the week after, and going over tax planning so that they have time to do some things. All right. That's a different hat. Now I'm sitting down looking at the tax return going, and the program I have runs through 1,600 different strategies to pull out, gives me a bunch of options, and I pick the ones that I think are best for that client. Then we meet with the client and discuss it with them, and then we implement it, which is the key. All right. What's another thing smart business owners do? Well, another thing they do is they call their tax preparer or their tax advisor before they do major financial decisions. Smart business owners always run their ideas by their tax advisor first. Every CPA and tax preparer can tell you a story about a taxpayer who did something and just didn't seem to think it was important enough to call their tax advisor. They'd rather listen to their golf buddy. I got a couple like this. I had a guy that was 59 years old and 4 months, 59 and 4 months old. His golf buddy told him that he could take money out of the IRA without a penalty as soon as he turned 59. Close. It's 59 and a half. All right. All right. This cost him $5,000 penalty because he didn't wait 2 months, which he could have easily done. Had one happen to me this year. Guy comes into me and said, I just sold a piece of property last week. Can I do a 1031 exchange? So it'll be tax-free because I'm buying another property. No, you need to do it before you closed. All you have to do is call me before. Now, this guy, not the same because he wasn't a client of mine. All right. I don't charge for phone calls. Call me so that I can give you the advice. All right. Anyways, another thing smart business owners do is they keep good records. If you don't have good accounting records, I can almost promise you that you're overpaying your tax. You're not recording all the cash you spend, all the bills you paid. You're not keeping track of items that you paid for out of your personal account, maybe. You're not thinking of purchases you put on a credit card. You can't defend yourself if you're audited. You don't have any documentation to support your deductions. The IRS gets reported your income. They don't get reported your expenses. That's up to you. And you need to make sure that you can justify and support your expenses. So without good accounting records, you simply don't. I can guarantee you're paying more taxes than you should. Smart business owners also start their taxes earlier. Right? If you plan to show up between April 1st and April 15th with a complicated return, you're better off waiting until May or June. All right. You want your tax preparer to have the time to prepare your return accurately without being rushed. And I've looked at it, most of the mistakes we make, and I count a mistake different than other people. I count a mistake something that we didn't ask that maybe we should have, because we're the experts, for God's sakes. It's kind of like going to a doctor. I don't know. I tell them my symptoms. I don't always know what to ask. They have to ask me questions. Well, it's the same with us. So I kind of count that as a mistake. So when I count my mistakes, they almost always happen. 90-some-odd% of them happen within 5 days of a deadline. That's why we just try not to do much within the last 10 days of a deadline. Okay. And it gets harder because the September 15th is the extension deadline. Like I said, the October 15th, there's no more extensions. Well, we just stopped. Sorry. If you bring it in, I tell people when the cutoff is. If they come in after that, we'll do our best, but we're not going to kill ourselves. Okay. You don't want us to make mistakes, and you want us to have time to work with you to make sure we get it accurate. So get it to your tax preparer earlier. Another thing people understand, smart business owners understand, is that they save for their taxes as they earn their income. If you know you're going to pay between $10,000 to $40,000 every year. There's no good reason to wait until June to look for, when you get the tax return, or April or March or October, to look for the cash. All right. That's just the nature of the beast. Look, we're going to do tax planning, but that doesn't mean we're going to eliminate your tax. Okay. Matter of fact, you might not want us to. I mean, you're going to look to get a loan. You're going to look to sell a business. Come on. There's a limit to what we can do. Even with good tax planning, there's a rule, start to get diminishing returns. You're going to spend $10,000 to save $2,500. You're going to spend $1 to save a quarter. When I'm trying to argue with people that maybe that's not the best thing to do, the only reason to buy new equipment is because it's going to make you more money, or because you want it. It's going to make you more money, or going to make your life easier. Sometimes, a new car because you want a new car or a new truck. Yeah, that's fine, but not for the tax deduction. That's gravy. That's something on top. Okay. That's the only reason to have new equipment, not to do it for tax planning, because it's going to trade $1. I'm going to give you $1 and save 25 cents. To get that point across, I usually tell them, look, if you don't want to pay the tax, I'll charge you $1 million and I'll pay the $250,000 in tax. Nobody ever takes me up on that. Wish they would once. So what I do is say, we're going to minimize your tax. We're not going to eliminate it normally if you're making money. So start saving start a plan to put money away for taxes. Now think about it. When you were on a W-2, or if you were on the W-2 before you had your business, you made $1,000. Your check was for $850 because they took the money and they sent it to the IRS every week. When you're self-employed, you're supposed to have that kind of discipline. So what I recommend is we come up with a percentage for, if you're a service industry, it's going to be around 15 to 20%. If you're selling something, you're manufacturing or selling something, 3 to 5% probably of your collections. So what I do is that I used to do it weekly. I looked at what I collected the week before and I transferred that, multiplied it times 15%, transferred it to a tax account. Now I do it when I do payroll every 2 weeks, but I transfer money into the tax account because that's not my money. That's the IRS's money. Now, when it comes time to pay the taxes, it still hurts to write the check, but I have it. All right. And if I put $50,000 away and the tax was $45,000, I give myself a $5,000 refund. Why not? Because you're not going to get a refund anymore once you're self-employed. All right. It takes stress away. All right. Out of coming up with a large pile of money when you file a tax return, it's much easier to put aside $1,000 of $500 a week or $1,000 every 2 weeks than it is to come up with $40,000 or $50,000 at the end of the year. All right. Plus, it helps you avoid penalties because you can send your estimate payments in on a timely basis if you want. Look, this is Wayne Blau saying, let's make this our most profitable year ever, and let's make sure we do tax planning so that we can actually pay the lowest amount allowed by law. We're in the process of doing that now. If your tax preparer doesn't do tax planning separately, then you're not getting tax planning. Find one that does. Give us a call. My email's on the site somewhere, but I'll give it to you again. It's wayne@wjb-cpa.com. You can call our office, 915-857-8158. Now, in the past, all my tax planning was happening in a 45-day period, so I really couldn't do many. I did the ones that really needed it. We're expanding it to do a lot more this year, but we still have a room, But take tax planning seriously. I mean, that money, $20, $30, $40, $50, $100,000 that you would pay to the IRS, I'm sure you can do something better with it than the government can. All right, till next time, this is Wayne Blau saying, let's make this our most profitable year ever. Thank you very much.